Welcome back, investors. Jake here. In this video, I'm going to be selling out of a position entirely, and that position would be General Dynamics. So let's check in with my Schwab account, and honestly, it's not going so well this year. Currently, year to date, I'm down 20% or about 12 grand, but we need to remember that January was rough. The S&P dropped almost 10% while I was 80% leveraged on call contracts. We're going to have to be smart going forward if we're going to make up this deficit. So currently what I'm trying to do is deleverage or take some profits. That's what I did with this debit spread on Apple. I'm going to do another one later this week on Berkshire Hathaway. And today I just want to sell to close these contracts on General Dynamics. Currently have 3 call contracts with a cost basis of $5,300, and they're currently worth, so I'm going to sell to close today, $7,695. So I'm up 42% on my cost basis. Now, am I up 42% because I'm a genius and I read the technicals correct and the fundamentals of this company were solid? And unfortunately, I don't think I am. So my investing thesis here when I got involved with General Dynamics was General Dynamics was uptrending in 2020. It got to a level of support here at $190. It was then range bound between 190 and 210, going back to, once again, April of last year. And I thought as soon as the 200-day moving average caught up to the share price, General Dynamics would start uptrending again. And you could argue that it has done that. It is currently channeling nicely in this range, with this line being the upper limit and this line being the lower limit. Briefly got below it when Omicron news broke over Thanksgiving. So hopefully this 210 is no longer a line of resistance, but it's a line of support for the company stock. So currently General Dynamics trading at 212 is above this 210, and maybe it'll hold. However, I don't think the share price of the company is above 210 based on the fundamentals or the technicals. It's trading up because of world events. So obviously, if you guys haven't been paying attention to the news, Russia is threatening to invade the Ukraine. They've amassed over 100,000 troops on the border, ready to go in. And let's just read the first paragraph of this article. Top weapons companies boast Ukraine-Russia tensions are a boon for business. In calls with investors, Raytheon and Lockheed Martin boasted that the worsening conflict is helping profits. As the United States weighs more involvement in the growing conflict between Ukraine and Russia, some of the largest weapons companies in the world, Raytheon and Lockheed Martin, are openly telling their investors that tensions between the countries are good for business. And General Dynamics, meanwhile, is boasting about the past returns the company has seen as a result of such disputes. There are lots of articles that I can find talking about how the defense contractors will see a boost if Russia does invade the Ukraine. If Russia does invade the Ukraine, then probably the defense stocks are going to be the only stocks that day that will be green with the market. And the market has been pricing in this invasion going back to early December. Lockheed Martin in 2 months is up almost 19%. Raytheon in 2 months is up over 19%. So General Dynamics, the one I picked, is actually a laggard here, and it's only up 12.5%. So when is this potentially going to happen? And I said this in a video last week, but because Russia and China are strategic allies, Russia doesn't want to offend or embarrass the Chinese people by starting this invasion while the World Olympics are going on. So the Olympics are set to end on Sunday, February 20th. That could be potentially, if Russia does invade the Ukraine, when they'll send them in because they want the ground to be frozen so their tanks don't get stuck. And in general, yeah, they're going to wait for the Olympics to end. So the geopolitics of this region, guys, obviously the Ukraine used to be part of the Soviet Union, and Russia, their politics, they don't have overseas empires. They have something they call the near abroad, where they view it as basically their sovereign right to dominate the countries that are on their border. Because Russia has been invaded so many times by world powers, they get pretty defensive when adversaries, potentially NATO, start incorporating or cooperating with countries that are directly on their border. So 6 or 7 years ago, Russia they invaded Crimea. The reason why is because the pro-Russian autocratic regime in the Ukraine, it wasn't really a democracy, collapsed due to protests and an uprising. Russia then thought that they were going to lose the Ukraine as their strategic ally, their proxy state, basically. And Russia was not willing to give up Crimea primarily because there's a very large military base here on the southwestern tip. This is where their navy and their nuclear submarines basically operate out of. So if Ukraine was going to join NATO and become pro-Western, then Russia would have lost this naval base, and they weren't willing to do that. So they just stole the entire peninsula. In general, this is like the warmest part of Russia now, so it's nice land to have on the Black Sea. And the problem with this peninsula, guys, is it doesn't touch Russia. It gets pretty close, and they had to construct this bridge to connect it, but this peninsula is attached to the Ukraine, and the Ukraine does not recognize Russian sovereignty over this territory. I'm rambling here about the geopolitics of this area, but what does Russia want? Does Russia actually want to invade the Ukraine? I think it's possible, but not likely, given that the casualties of doing such a thing would be thousands of Russian troops, if not tens of thousands of Russian troops. Additionally, I think it'd be a cakewalk for Ukrainian military to blow up this bridge and other strategic infrastructure that Russia has been building the last 4 or 5 years. How would the Russians take that once they inevitably roll into Kiev? How would they treat Ukrainian leaders if they did that? I don't know. I think more than likely Russia just wants concessions. They think it's a good idea, basically as a military exercise, to mobilize and build up all these forces on the border, but they don't actually want to invade the Ukraine. They just want concessions. So potentially the State Department, Germany, the UK, other Western powers could announce some kind of deal with Russia where we lift the sanctions we put on them 6 years ago for invading Crimea. Ukraine could also formally concede Crimea and say, this is Russian territory now. We forever, in perpetuity, relinquish our claim on this territory. It's yours now. Or Ukraine could just give them more territory and give them this southern region so that Russia could completely connect to this peninsula now. Where I'm going with this is that if the State Department or Western powers announce some kind of breakthrough in diplomatic talks, what do you think is going to happen to General Dynamics' stock price? If we don't go to war, obviously the United States isn't going to get involved militarily, but we would support military aid and military arms to Ukraine and anybody who wants to help the Ukraine. But if we announce that this it's not game on, the war is not happening, what do you think is going to happen to Lockheed Martin's stock price? What do you think is going to happen to Raytheon's stock price? So for that reason, I'm putting my money, guys, on the Russia is not going to invade the Ukraine. They're just going to saber rattle until they can get concessions. And based on what I'm reading, I think European powers are going to do it. I think the Ukraine is probably just going to formally concede this territory and say, it's yours forever. Please don't invade us. So we're back in the trade window with Charles Schwab, and I'm selling to close my 3 call contracts with a strike of 200 and an expiration date of January 2023. Hopefully I'll get close to this 7,680. The bid ask isn't that wide, and Charles Schwab does a really good job at filling this. So let's just go ahead and execute. So back in my Schwab accounts, you guys can see that my cash balance is now up to 13,500. Once again, for that drop we experienced in January, I had no cash, no ability whatsoever to buy the dip when the market fell 9% in January. And I think another one of these panic sell-off flash crashes is coming, either the third Friday in February, the third Friday in March, or potentially in anticipation to the next Federal Reserve meeting, where I guarantee you they are going to raise the federal funds interest rate, either to 0.25% or 0.5%. I think the anticipation and the build-up to that day will cause the market to sell off, and then as soon as the Fed has their meeting, the market will rebound. So I am looking to time the market a little bit with this cash when I want to open new positions, and I'll be making videos obviously when I do that for you guys. But for the rest of this week, we got to talk about Texas Instruments, we got to talk about Berkshire Hathaway, and potentially we're going to address HCI as well. Okay guys, if you enjoyed this video, give me a thumbs up so the algorithm knows it's good. If you have any comments or questions, I love hearing from you guys. Let me know down below. Till the next video, take care.